Welcome to Markets Now. I'm Michelle Rook along with Brad Koima with Koima Varlick. We're seeing a two-sided trade in the livestock here already this morning, but kind of drifting as we go into the early part of the session here. And we're seeing mixed to lower trade over in the grains. And Brad, let's talk about the cattle market first off, as we normally do. Cash has been leading this thing. The futures, I know, took a little bit of a break here, but if cash is higher again this week, will this market go back up and take out the contract highs from last week?
Well, that's a great question, Michelle. Thanks for having me on. Of course, I always enjoy this a lot. A record precedenting a period here that we just went through. Cash cattle tacking $20 on in 3 weeks or so. New all-time highs. I don't know. You asked me about cash cattle and whether, I guess I feel like the futures market, because of the discount, has a very, very good chance of taking out their highs that they made last week. Cash market, I guess, subject to change. Okay, you know that I've been as bullish as anybody, more than most, frankly. It just feels to me like you got a week here, maybe where we are limited a little bit by our friends in the South. And, last week they traded cash cattle in Texas on Friday afternoon at a booming 175. I got 185 on Thursday. I don't remember, $3 to $5. I remember that a million times. $10, I don't know. So we'll see once, so you get to that drag then, so if you're a Nebraska plant, are you going to buy cattle out of the South? Or are you going to buy cattle out of the North? Anyway, you can hear I'm making up an excuse why cash might only be steady-ish this week. And we may have a steady due to lack of trade week. I don't think the producer in the North is going to be real anxious to take less money. We don't hardly have any cattle on the show list to begin with. An old cropper is scarce as hen's teeth, a yearling. And that'll be the next thing that'll probably happen here, Michelle's. We'll start to tier the market where old crop or yearling type cattle will be one value, and these new crop calves that don't have much grade in them will be a different value, which is not uncommon either for this time of year. So I'm going to vote for pause for the cause this week.
Record cash last week, though, on a national weighted average, 180.44, I believe. So congratulations. I think you were one of the people that predicted that quite early.
Well, that's very kind of you. Thanks. It's even a blind squirrel finds a acorn now and then, right? So.
That's right. But cash has been leading this thing. Is that indicative of a bull market? And do we have any other analog years that we can look at in terms of this basis play?
That's a great question. Philosophically, kind of get a kick out of these kind of questions, actually. No, the old days, futures led everything. That's why they're called futures. But, since, really, to me, since the pit closed in 2015, the personality of the market has changed some, where you've got algorithms and funds and traders that have been blistered by a couple of black swan events, i.e. the fire at Holcomb and then the pandemic. So you've got a long speculator that's a little jaded, a little less courageous. And so that has seemed to have turned the tide here now, where it almost seems like you got to have proof in the cash before the trader dares to trail along and follow it. This basis thing that you brought up is worth talking about, I think. I've found a year that's very similar. An analog year was 2017, where, believe it or not, that was also a year where this time of year cash was about $20 above where the June futures are. So you historians that have an ability, you can look it up, see what happened then. What happened was June futures rallied some, but not a lot, and ended up really not even, they sold off toward the end of their contract. So unfortunately, what typically would happen, the basis is always positive this time of year to June, almost always, unless you've got pandemic. Okay. What happens typically is that you narrow that, or you get convergence by the cash coming down to meet futures by the last day of June. So, I don't want to sound like I'm super negative, but I'm just recognizing the fact that cash is $20 above where June futures are.
No doubt. What about the boxes? We're at 305.98 yesterday on the choice on the closes. Do you think we'll keep going here in terms of this box beef value? Because we're into the time period where obviously we're buying for some of the best demand here for the grilling season.
Packer margins are snug. They have the ability to price boxes where they want to until they get pushback. This would not be the time of year where you'd expect to get pushback for the reasons that you just said. Mother's, excuse me, warmer weather after a very, very long winter is one thing. Mother's Day, Father's Day, Memorial Day, the demand, the demands deal is just, they're stacked up here. This is the time of year where, um, you can sell meat. And so I would expect that the boxes will stay firm here for quite a while, maybe until, let's just grab a date, let's say a week before Father's Day, and then we'll see once if the perspective changes a little bit. But for the here and now, I think the Packers got a real conundrum. He can talk about cut and kill and all the rest, but he needs to be a reliable supplier, if not now, then never, of beef. And he's got this whole labor challenge of how do you get people to work if you're going to cut hours. So too bad for them. It's our turn. It's the producer's turn in the saddle, in my opinion.
Yeah, I was going to ask you about that, if the Packers were going to cut kills to prop up the box beef values, because they do that or have done that in the past.
Well, they can do a little of it, but some of it's been scheduled for a while. They got to do cooler cleanouts. They always do that this time of year, and they make a big deal out of it, but so there's a little bit of that, but I don't think anything that's going to really rock the boat.
Well, it's a fun time to be in the cattle business in one respect right now. Just hope everybody is making a little money here at these levels.
I think finally they are. I've had closeouts of cattle sold at 175 that didn't make money, believe it or not, because of the brutal winter and the cost of gain. So hopefully we get a little turn in the saddle here and can make some money back.
Gotcha. What about the hogs? Are we finally bottoming that market? This would have been the third day up, but we've drifted since the opening this morning. And now June is actually the most actively traded contract. Now that April's off the board, we have a big premium. What happens?
Yeah, I was just taking a peek here what the hogs were doing. Excuse me for that. Old trader. I think he might have been a belly trader back in the day, 40 some years ago when I started this. I remember him saying to me one time on the hogs, hogs are a market that you have to sell discounts and buy premiums. Let's hope he's right, because these June hogs are a premium. The market is smarter than I think people usually let on, though. The one thing that I wanted to say about the hogs is it seems to me like you've got odd fundamentals. I mean, around here where we actually do raise hogs, there's actually quite a bit of push here, and the Packers trying to find hogs. It feels like the numbers are a little tight, and yet we get nothing to show for it. Cash hogs down $2 yesterday to the Iowa average. The thing I would watch technically, because I think that's really what this market is, unfortunately, is purely a technical market with the funds at a record short position. Yeah. And we got to look at, okay, where are we? Where do we got to get get them to blink? I think, like you said, if we could close higher the third day, that's your first step. If we could close above the highs of the day, which is 88.77, I think then maybe you would start to trigger some short covering. And as big a short position as they had, that maybe would be enough to finally get us up and out of this hole that we've dug. Yeah.
What if we failed today, though, here on the June?
Unfortunately, that's been the pattern. If I had a bet, that's the side of the market I'd bet on. The funds have been winning. They'll defend their position if they can, and that's probably exactly what's happening now. So I feel like it's a long shot to close higher today. I hope I'm wrong.
Yeah, and this isn't like the cattle market where the funds are buying the brakes. So
not at all. No, they're pressing on that.
Yeah, they're pressing it. Corn market, we're seeing the old crop contracts lower this morning, or lower than the new crop. In fact, it looks like we're unwinding bull spreads. Have we just run into resistance? Is this a weather play? What's going on in that corn market? Because where you're at, obviously, cash basis levels still really tight, aren't they?
And got tighter. Actually, locally here, basis went another nickel. We went from 60 to 65 over here.
Wow.
Yeah, I know. It's crazy. You wonder if some of the people at the exchange are worried that the futures market's lost touch with how to trade. The basis we just talked about in the hog or in the cattle futures, and now look at the basis and the corn futures don't even seem to really relate to the market. But regional imbalance in supply, right? To me, on the corn thing, planting progress was 8%. The average is 5%. I don't know that the market cares a great deal about that. Next week, if we do this, we'll talk about weather, I'm sure, exclusively. The weather looks a little cooler, a little wetter for a second. It's hard for me to imagine that the old crop corn can break very far given the strength of the cash. I'm a little more of a proponent to be sensitive to the new crop values. and I feel like they're vulnerable.
Yeah.
This year feels to me like 2013. You came off a drought, and then you had huge planted acres. 92 million is what they're expecting this year, also huge. And then the weather improved, and we raised a big crop, and we flipped those old crop, new crop spreads to like $1.80, where so July corn was that much over D's corn. So, speaking to the hedge audience, I would be dialed in here on rallies. It's only April. We're going to get some chances here on some weather bounces, but my inclination is to sell into those in both the corn and the beans, Michelle.
And the beans, you're still not very friendly beans, are you? Even with this big demand?
I'm not, because we're not priced competitively in the world. Brazil's got a monster, and we'll see. I don't know if it's going to rain or not, but the odds are that it usually does. That's why they call it the Corn Belt. So I'm going to bet on that we have a normal crop this year.
Okay. Thanks for joining us. As always, Brad Koima with Koima Varlick, and that's Markets Now.